Happy Monday, everybody. It's Austin with Firehouse Finance. Thank you for joining me. I hope everybody's having a good week so far. I've been fairly busy and on night shift this week. Just wanted to give a quick update on things that have been going on here lately. Apple surpassed a $2 trillion market cap, I guess, sometime last week. So everybody kind of knew it was coming, but Apple's come a long way, and Apple might go to the moon. Who knows? Next next thing you know, they might team up with Elon Musk and go to the moon with SpaceX or something crazy. But other than that, the S&P 500 has been setting record highs, which, of course, as you know, is kind of out of the ordinary for something that's going on during a pandemic. Stock market's been doing pretty well here lately, and most people would not have predicted that. And many of the experts and Wall Street analysts were thinking that the stock market was going to go down deeply and not recover for a long time. And I think that America's trying to stay positive, and the world as a whole is trying to stay positive and cling on to the positives right now. And I think that's kind of what's driving the stock market as a whole, is everybody trying to stay positive, which is a good thing. We've had some good earning reports from different companies in the past few weeks that have been very positive and show a bright future as we continue moving forward. Something this morning I seen was the Federal Reserve put out a statement that they're not going to raise interest rates despite unemployment falling. I know that sounds kind of confusing, but Federal Reserve kind of has a role in the way that the economy goes and the GDP as a whole, and loans are affected by the Federal Reserve because they set the interest rates, and that kind of sets a precedence all across the board with private and public entities taking out loans or giving out loans or vice versa. You know what I'm saying. Other than that, opening the market up today, I'm sure in the positive. I think it's going to be a good week. The market's been looking pretty good here lately. Since our last episode, I put another $50 in my Dividend Portfolio 1 and Dividend Portfolio 2 on M1 Finance. Links are in the description if you would like to look at my two different portfolios. Recent dividends that I've had since the past episode: Caterpillar was 3 cents, Starbucks was 2 cents, Royal Bank of Canada was 9 cents, Fastenal was 2 cents, Bank of Montreal was 28 cents, and Paychex was 11 cents, for a total of 55 cents in dividend payouts since the last episode. Doesn't sound like much, but of course that adds up over time, and it's a compounding factor. It's a dividend reinvestment portfolio, and you can base it on, some people would say, passive income. I don't really like to use those words. You even have some people that believe in the FIRE movement, the financial independence, retire early deal, and I've read different things about that and listened to different people talk about it, and I don't know if that's necessarily my whole goal of having a dividend reinvestment strategy, but it will definitely help down the road. As I get older, maybe I can rely on some dividends in the future to pay a bill or two here and there, or maybe use some of the extra money for leisure activities and things of that nature. In order to kind of live off of dividends alone, you have to have a portfolio of probably roughly 600,000 plus for you to make about 24,000 a year off of dividends, and then of course you'll have to pay taxes and all that because it's income. But the compounding factor can make all this speed up quicker, and you have to factor that in. But it also comes down to what you can put in your portfolio each week or bi-weekly or monthly. I'm only able to put in $50 in each portfolio bi-weekly. So every 2 weeks, $50 in each. Some people out there are putting in hundreds of dollars every time they get paid, and I can't really do that. I mean, I'm just a firefighter and an EMT, so sometimes I'm pushing it to pay the bills and keep myself and the family fed, if you know what I mean. Just a normal working guy here. Other than that, portfolio one is sitting at $663.57. It's up $68.75, 11.56%, and that's the time weighted return. There's also what we call a money weighted return. The difference between those two is the money weighted is what they call realized gains, and the time weighted factors in like capital gains that you haven't realized. So like I'm keeping the stocks, I'm investing and holding them, so they're quote unquote unrealized gains, because I haven't sold out of any of those holdings. So from now on, I think I'm going to give my total portfolio value, and I'll go off of the time weighted, because I feel like that's a little bit more accurate. The money weighted can vary greatly day to day as the market goes up or down. The time weighted is a little bit more stable of a figure and percentage. So I think from now on, that'll be what I tell you guys is my time weighted returns, and I will give you an update on dividends that I've received since the last episode. Something else that I do is I track my dividend payouts from my M1 financial statements at the end of the month on a Google sheet. I'm not real good at Microsoft Excel and Google Sheets. It was something that I got from somebody else, but I put all my dividend payouts on there, not separately, like each month though, the total payout amount, and then it graphs it and projects out what I'll make in the future months. So that's pretty neat, and I'll find a way to share that or put a link in the description. But other than that, I'm trying to finish off night shift for the week. I work 7 days on, 7 days off, 7 days on, 7 days off, and I do a differentiation of days and nights at the fire department. So I'm going to wrap this up. Thank you for listening. Please feel free to share with your friends, family. You can find this podcast on Anchor, Overcast, Pocket Cast, Radio Public, Spotify, and YouTube. I should be on Apple Podcast and a couple others coming up probably in the next week or two, and I'll keep you guys updated on that. Links are in the description. Like I said, if you want to see my M1 Finance portfolios and what they're looking like right now. If you have any questions, comments, anything like that, feel free to email me. I think Anchor allows you to leave a voice message. That's another option, I think, if you would like to do that. But yeah, other than that, I hope everybody has a great week, and I appreciate you guys listening to Firehouse Finance.